Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. First off, before I get into the video, I hope everyone had a wonderful Christmas and the New Year's is fast approaching. It's on Wednesday, markets closed for that day. Again, thank you for all your support this year. Looking forward to a great 2025, though I expect quite a bit volatility, perhaps recession, stuff like that. Anyway, again, I'm Matthew Frailey, founder of BreakpointTrades.com. I founded it 21 years ago, back in 2003, to provide the best technical analysis on the planet and the best mechanical trading systems. By the way, some of our mean reversion systems absolutely nailed it on that first big pullback in the market a couple weeks ago. 6 of our mean reversion systems bought that pullback, as you can see, and they exited last week for nice trades, nice profits for our subscribers. And they got out just in time, while the market has since sold back off. So just an example of some of the systems here at Breakpoint Trades. Okay, back to this newsletter at hand. Again, it is Monday, December 30th. And this is a technical analysis review of the markets. This is our backend recorder for our standard website subscription service, and I'm going to get that started right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Monday, December 30th newsletter. Hope everyone had a wonderful weekend, had a great Christmas. New Year's is fast approaching. It's on Wednesday. Markets are closed on Wednesday, obviously. Going to close out the new year fairly soon here. We've had a great year. The systems have had a great year. Anyway, this newsletter here is divided into 5 major sections. Not at any new trade ideas in this volatility and with the end of the year approaching. So first off, we start with our opening statement on the general market. Then going to move in, also discuss our recent systems, our mean reversion systems. Really have nailed these recent moves. They went long in that pullback. They got out last week, locking in nice gains before this recent sell-off, which started last Friday. Then we'll move to the general market analysis. We'll look at the major indexes, top-down approach. We'll look at a weekly chart, daily, down to intraday charts. We'll look at a few indicators like the VIX and some other indicators. We'll look at a few of the sectors. We'll look at the US dollar, Bitcoin, commodities, precious metals, and GDX, mining stocks. All right. As far as today, like I said, we had a big gap down in today for the market. Basically, the market followed through on last week's late sell-off. As you know, we warned ahead of time that the market would find major resistance at that previous breakdown area, which became a supply zone. We warned about that, and that's exactly what happened. In fact, this little bitty chart here, you can see basically price rallied perfectly up to that area. Here's a bigger picture of it. So again, this was previous support. We warned that this would be big resistance and would fail on the first test. And that's exactly what happened. The mean reversion systems went long back in here. They sold last week right around this range. Price got right here. That was a great place to exit longs if you had them and to enter shorts. Then we've sold off. In fact, you had a perfect one-to-one symmetry bounce there. Now we'll see what happens to the market here. So this is the S&P 500. There's many options, guys. This could form a coil if it can hold this recent higher low. If it does not, then this could simply be a wave B bounce and we get a zigzag down in a wave C. Again, there's myriad options. There's a more bearish option where this is a wave 2 and we're going to enter a wave 3 sell-off, whatever. We're still in the confines of this potential triangle that could be setting up. But either way, it was logical to expect the market to fail at that previous breakdown area. Okay. Today, big move in natural gas. Last week, it broke and held that 200-day moving average, which we talked about. And then over the weekend, there was some weather report, long-term weather report that shows major cold weather coming. Natural gas moves with the weather, so big up move there, up about 18%. And today, the news PMI came in much worse than expected. Came in at 36.9. The market was expecting 42. So definitely continues to show contraction in the economy. And again, markets closed on Wednesday for the New Year's. Thursday, we have initial jobless claims, natural gas inventories, and then ISM manufacturing on Friday. The jobs report isn't this Friday, it's shifted to next Friday. Okay. Bitcoin has also been weak with the market. It's not moving on its own. And in fact, there's a critical support here. If it doesn't hold, we could see a larger drop down into the 70,000s. So we'll see if that can hold. Anyway, let's get started with things. So first image below, item number 2, this shows you the 6 mean reversion systems that triggered just about a week and a half ago on SPY and MES futures. These were emailed out and texted to our subscribers. Again, you can see these mean reversion systems on SPY. They went long nicely on the previous Wednesday 2 weeks ago. Caught the longs. They sold last week on Thursday. Excellent exits. Made nice profits. And here's the systems that triggered on the futures. Again, great trades here. Congrats to our subscribers who followed those. Again, you would have paid for your membership many years just taking these trades. Again, these mean reversion systems, they're highly profitable with about 80 to 90% winning trades. They don't try to hold for long periods of time. They get in, they see an opportunity, they get out, and they go back to cash. They're all in cash at this point, waiting for the next trade opportunity. None of these triggered again today on the sell-off. And image number 3. So I've been talking about these volatility systems, and they also did great. These are based on the volatility instrument. So the SPY uses the VIX and the Bollinger Bands. That also had a similar trade. IWM didn't go long. Goldman Sachs, IBM, all these had nice trades. And in fact, I did some work on the weekend because these volatility systems, there's 14 of them that I have. The major indexes here, SPY, triple Qs, DIA for the Dow, IWM for Russell, as well as EFA, EEM, EWZ, that's Brazil, gold, crude oil, IBM, Amazon. I mean, tons of these. These are the volatility instruments. They use the Bollinger Bands. And these are the number of trades broken down per month. There would have been 171 trades this year. So these also have high probability trades, just like the mean reversion. And they give a lot of opportunity, as you can see. Okay. Well, these are something I'm planning on bringing sometime in 2025. So once I do that, we'll have the mean reversion systems, we'll have the volatility systems, and of course the KISS systems. Next, just doing a recap since I don't think there are going to be any new mean reversion system trades this year. So here's the official mean reversion systems that triggered on the SPY ETF. There was 29 trades this year. Again, not a lot because it was generally a very strong year for the market. The systems are usually quieter in low volatility, but they still did 29 trades, and you can see almost all these are winners except 2, and this was an error. Okay, the trade didn't occur. There was an error on our side on the charts, but otherwise all these were winners. So very nice. You can see the recent trades that triggered on December 18th and 19th and 20th. They all made nice profits. And here's the mean reversion systems that triggered on the ES futures. So they triggered a few more trades than ES, 35 total trades this year. So if you just took the modest trade size here, MES, instead of using ES, we use the micro futures, that's MES. So if you'd have done that, the recent trades here made about close to $1,600. There was one losing trade here. But look at these trades. If you just took all these trades this year, you'd have made about $28,000 on these small number of contracts. So just a great example of one of the things you get at Breakpoint. And also, guys, here's some updates to the statistics, trade statistics to the recent systems that triggered. So here's the CCI divergence long that triggered on SPY a couple weeks ago. That trade closed out nicely. This one has some amazing statistics. Profit factor of 256, which is unreal. Again, you get that by the gross profit divided by the gross loss. You can see system made $12,800, only lost $50. So that's why you have the insane profit factor. Doesn't have a lot of trades, 57 trades, but about 96.5% winning trades. It's a hard system to trigger, so that's why there's only 57. This goes back to 1997. Max of 29 total trades and one loser. I mean, consecutive winners and one loser. Again, average time in trade is 4 to 5 days. You can see a nice profit curve. Next, here is another system of the trigger. This is the QEBTS long. So it's got a nice profit factor of 20.3. Very excellent. About 90% winning trades. It's more active than the CCI, 154 total trades. 30 consecutive winning trades. Max drawdown in the history was about 13.5%. Okay. Average time in trade about 11 to 12 days, and nice profit curve. And here's another system, one of the systems that closed out recently. This is the trend pullback that triggered on SPY. Profit factor of 10, 85.5% winning trades. This one's more active, 214 total trades. Excellent profit curve. And there you go, guys. So again, congrats to everyone who took these system trades. And if you happen to be just a YouTube subscriber, watcher, you should subscribe to Breakpoint Trade so you can get access to these systems. We send out trade notifications to these systems whenever they enter a trade. We tell you when to exit, etc. You just simply follow. All right, let's go back to the general market. So image number 10, this is the index sector table, what transpired today. Again, today followed through sell-off from Friday. All the major indexes down quite strongly, with the NASDAQ the weakest, down 1.3%, Russell down 0.8%, S&P down 1.1%. As far as the 21 market sectors, fairly broad-based sell-off. Only one sector was up, and that was oil services. Energy was flat. Energy, by the way, is a sector that we're looking at as a macro hold for 2025, especially after this recent correction. Currencies, US dollar was up a tad today. Bitcoin continues down. It's now down to just below 92,000. Remember, guys, I warned you not to chase it over 100,000. There's a big support around in here. It needs to hold. If it doesn't hold, we could see this fall down to 70 to 75,000. That's the next big support. Commodities, the general DBC was up, as well as crude oil. Some mixed bag in some of these other ones. Big move in natural gas, up 16.4%. Remember, it broke and held its 200-day moving average last week, which we pointed out multiple times. That was bullish. And then on the weekend, you got a long-term weather report showing big weather or cold weather coming in. And when you're trading natural gas, you also have to be sort of a weatherman as well. But that helped goose it. So big move there. And precious metals all continue to the downside. Remember, we've been cautious, a little bearish on gold since October. We're long-term bullish, so we welcome this consolidation correction. And ultimately, it's going to produce a nice buying opportunity once it's over. And as far as the bond market, we did see a drop in the 10-year finally. Didn't help the market, though, today, did it? And finally, image number 11 shows the economic news calendar. Like I said, we had the PMI today, which came in at 36.9. They were looking for 42 to 42.7. So it came in quite weak. Market didn't like that. Tomorrow you have housing, FHA, housing index, Case Shiller. Markets closed on Wednesday, initial jobless claims on Thursday, and Friday ISM, natural gas inventories. No jobs report this week. It's pushed to next week. Usually it's the first Friday of the month, but not on January. All right, guys, let's move to the index charts. So first chart below, item number 12, is the daily snapshot of the 5 key major index, just with simple Bollinger Bands. So you can see, the Dow and a lot of these large cap tech stocks started selling off in early January. You can see on the Dow there how it was super weak, as well as the Russell. So market started weakening there. The S&P and NASDAQ followed after. They got oversold before Christmas, and we had a typical bounce, but which stalled at previous support, which became resistance. Now we're pulling back again near the lower Bollinger Bands. We'll see if we can form a higher low here, or if we need a zigzag move where we take out the recent lows. Okay. Next, moving on to the indexes themselves. So here's the Dow. So remember, the Dow found support in this demand zone, but like I said, I warned you guys that it would find resistance at the back test of this broken channel, and that's exactly what happened. That was a great short opportunity. If you went long the previous week, early in the week, hopefully you sold the back test of that channel or took a short. Now we'll see, can it hold this area, or does it need to test the 200-day moving average? That's a possibility, not too far away. Next, number 14, here's the S&P 500 high performance KISS system. Remember, this got out just over a week ago, so it is in cash. Okay. Next, number 15, here's the 4 time frames. The daily, like I said, daily got out, upper left here. It is holding a little ATR at the moment. We'll see if it can hold that. Notice you got a subcycle support here as well. Again, it needs to hold this area. Otherwise, I fear that it's going to come down lower in that zigzag pattern. You can see on the half-day chart, bounced off the ATR today in support cycle. We're below the ATR on the other time frames. Next, number 16, here's the weekly S&P. Again, it's Monday, but just showing here the weekly. We've been in this uptrend channel since late 2023. It's been a heck of a rally since the 2022 bear market bottom there in October. We've had this MACD divergence developing for many, many months. Okay, we're still in the channel. Moving average ribbon is still bullishly stacked for now. But again, we have this divergence we've been working on. We have a little demand zone down here, which we bounced off a couple weeks ago. That's still support. Major supports the uptrend channel. Next, chart number 17. Here's the other weekly chart I've been showing. So if the market decides to have a decent correction in 2025, we could see something like this, where we had a recent wave 3 of 5 high, and we're going to get a wave 4, major wave 4 correction. Again, this could be to the 23.6 to 38% fib. And you can see it could be quite a few points. I mean, 23.6 fib is around 5,500. 38% fib is around 5,100. So that's quite a correction just point-wise, but very valid that, you know, we could see something like that. Then you get another rally to new all-time highs in a 5. But again, this wave 4, if we get it, guys, could be quite deep point-wise. Watch the coiling action too on the RSI indicators here. Next, chart 18, here's the daily view of the S&P. Remember, guys, this previous area we said would be big resistance on a back test, the first test. Also supply zone. And that's exactly what happened last week. We tested it on Wednesday and Thursday. I hope you guys took your profits there. Remember, the mean reversion systems went long right in here into this support, and they sold up here. So they did their job perfectly, and I hope you did as well. We've come down. Now we'll see if we can hold this last higher low or not. There's an open gap here which may need to be filled. If that needs to be filled, then likely we come down in that zigzag at least. Next, chart number 19, here's another daily chart. Again, we're still holding this channel for now. There's this big support right in here, the 58.50 we're trying to hold. If we don't hold this, guys, then likely we come down to this big area down here around 56, 56.70, whatever. It's not a single number, it's a range. But you can see this was previous resistance, became support. So this is a big level down here, also closer to the 200-day moving average. Also, again, under a bearish view, notice you got kind of a head and shoulder look there, don't you? So we'll see. This is critical support to hold in here, guys. Bulls need to defend this, otherwise I think we come down to here. So onus is on the bulls. Chart number 20, here's another version of the S&P. Now this would allow for another move, another high here as a wave C. Okay, with this last pullback as a B and a C. But like I said, the onus is on the bulls. You need to hold this recent higher low. Chart number 21, here's a 60-minute chart that I showed in the early part of the newsletter. So again, we broke down from that support in mid-December, had that big waterfall sell-off. By the way, the mean reversion systems went long there. We had a perfect one-to-one symmetry bounce into the resistance zone. We said this was big big resistance. Again, go listen to my videos and newsletters. We warned about that, and that's exactly what happened. Now, I added a potential coil. If we can hold this area, we could form a coil, go sideways. But if we lose this, guys, then likely we go down to those lower levels. Okay, remember there's that open gap way down here around, what is that, 57.80. I think at minimum you go down to there, if not lower. And chart 22 is a 15-minute chart, just shows that ABC action into that resistance zone. And we did get oversold today, bounced, then we sold late in the day. Now we'll see what happens tomorrow. And finally, chart 23, here's SPXU. That's the triple inverse ETF for the S&P. So again, guys, this was a great buy down in this demand zone when the S&P tested that resistance area. Really nice trade. Hope some of you took an opportunity there. Moving on to the NASDAQ, here's the triple Q's high performance system. This also is in cash, went to cash just over a week ago as it hit its smart trailing stop. One thing here, notice how we're below the ATR. This kind of has a wave B look. So this also could support a move down in a C, just the way this looks. So systems in cash. Chart 25, here's the 4 time frames. Again, you can see we're below the ATR on the daily. We tested the ATR on the half day, became resistance. We're below the ATR on all the lower time frames. There is a little support cycle that showed on the 130 minute, but we'll see if bulls can defend that or not. And chart 26, here's the daily triple Q. Still holding this channel for now. That's a big area on the 50-day moving average. So if those areas are lost, likely we'll see a meltdown, closer to the 200-day moving average. So that's a big area for the bulls to hold. Chart 27, here's a 60-minute view. Again, just like on the S&P, we had the perfect 5 waves up in the mid-December. Whenever you have 5 waves, you look for some reversal, okay? And we got it in a big way. Then we had a simple reflexive ABC bounce, symmetry move, and sold off. Here added a little critical support. Bulls really need to hold this line, otherwise, like I said, I think we sell off further. Chart 28, here's IWM small caps. They had a really nice breakout from this ascending triangle back in October, November, but then topped out and had a pretty good sell-off. Okay. Notice down here you got the 61 fib and 200-day moving average that are pretty close. That could be a magnet on a further sell-off. Finally, chart 29, here's the 2-hour view. Notice we have it's trying to hold this demand zone for now. It's multiple tests. We do have some MACD divergence to help support a bounce, but like I said, the onus is on the bulls to get this going. If you went long a little Russell here, I'd just put a stop at that recent low there. All right, guys, that does it for the major indexes. Now, quick check on futures. They're down slightly tonight. Not seeing much action. Moving on to the indicators, here's the VIX. So the VIX was up today. Still really no fear in the market, quite honestly. Chart 31, here's the 60-minute view of the VIX. Remember, the VIX likes to fill these gaps. We got a couple big open gaps below. So if the bulls can hold support and get a rally going, these could be targets to the downside in the VIX. We'll see. Chart 32, here's the NYMO McClellan oscillator. Remember, one thing that started this sell-off was the weak breath in the market that was present since late November, all into mid-December. Okay, that was an early warning, and this got really oversold. You could see back to April lows, or even a little bit below it, below the lower Bollinger Bands. That produced a nice, at least mean reversion bounce in the market. A couple other things I want to show you guys. Here's the percentage of stocks in the S&P 500 that are above their 20 EMA. Remember, this got buried at the recent low, basically back to the October 2023 lows. It moved up as the market bounced, but now it's coming back down. But guys, a lot of times, whenever this indicator gets oversold, a lot of times you need a second retest of the oversold region before you get your low. So I'm wondering if we're going to get something like that. Let me show you another example. So chart 34, here's a chart from 2023, the same chart. Notice how, when it got oversold in early 2023, it needed a second low, and then in later 2023 needed a second low. So I'm wondering if we need to see something like that before a true bottom is in. We'll see. Moving on to the bond market, here's the 10-year. Now the 10-year did stall at this resistance. It didn't help the market today, but that's one thing that's been spooking the market. If we can see rates start pulling back more, that could help the market. Obviously, it had a huge rally off that demand zone. Chart 36, here's a monthly view of the 10-year. So someone asked me to look at this. You can see 5 clear waves to the upside, right? Then we got an ABC, kind of a bear ABC flag, and we breaking out again. Now, the question is, was that a wave 5 of 3? Is this going to go on to make a new high or not? That's the question. And chart 37, here's high yield corporate. Now this bucked the trend a little bit. It was up today. Market tends to follow this, so it is still holding support. And this was up while the S&P was down. Quickly reviewing some of the market sectors. Here's XLK Technology, still in this wedge pattern. We drew the lower wedge, still holding this for now. But definitely, divergence has been in place. So onus is on the bulls here as well. Chart 39, here's the semiconductors. Continues to be inside this coil pattern. We're going to keep an eye on that coil. Chart 40, here's the transports. Remember, they had a big sell-off here from late November. Still trying to hold around this 200-day moving average for now, but recent bounce stalled at that 9 EMA. Chart 41, here's XLF Financials. They also topped out in late November, broke some support, back tested, the broken support, turned resistance, declining 20-day moving average. Chart 42, healthcare. This sector continues to nosedive. Look at this. Recent little reflexive bounce, down yet again today. Look at that moving average ribbon as well. Now, one sector that really interests Steve and I for the new year is energy and oil services. First off, nice sell-off from the top of the range, which I warned about back in mid-November. You can go back and look at my videos or newsletters. Now, they did get oversold here last week near the bottom of the range, bounced back to the 9 EMA where it's struggling a bit, as you'd expect. Chart 44, here's the bullish percent energy index, BPNR. Remember, these are normalized from 0 to 100%. So this is working down to oversold territory. It's now 28.5%, so that's good to see. Again, it can fall lower, all right, but it's nice to see it down in this more oversold region. Back in April, whenever the energy area topped, that's when this was up around 90%. So covered by my text here, but you can see it. It was up here around 90%. That's the time when you don't buy energy. You buy it when it's oversold. Also, some of you guys may have noticed Occidental Petroleum, Warren Buffett's favorite oil stock. He recently bought more of this. It's had a nice correction this year from the April highs. So nice bounce on that wedge. Now, what I don't know is if this is a true wedge. This could be a wave 4. Maybe it needs one more move down on a 5. We'll see, but it's something to be mindful of. Still, I think it's not a bad area to start scaling in a bit of it. Chart 46, here's the weekly view of Occidental. Now, there is a little support here. If it does make a new low though, guys, there's a bigger demand zone down in this range, which I think would be a better buy. I don't know if it gets there or not, but just something to watch. The other energy stock Warren Buffett owns is Chevron. He doesn't own as much of it. I think he owns around 6%. But you can see it's been basically in a range for the last few years. So one to watch as well. Again, I think energy could be an interesting for 2025. Moving on, chart 48, here's the dollar. The dollar it has a recent divergence here, but it continues to hold its 9 EMA. So until it loses this 9 EMA on a closing basis, it is still quite strong. Chart 49, here's Bitcoin. So Bitcoin, remember, we were looking back here when it was trading in the 60,000 area. We were looking for it to rally to 100, which it did. It got over 100,000. Hopefully you guys didn't chase that. That's where the lemmings chase. Notice your very strong MACD divergence here. Notice those 3 peaks. Sometimes you get that. That second divergence there was a big warning. Anyway, it's sold off with the market. There's a big support zone in here. Now, it really needs to hold this, guys. If it doesn't hold this, there's hardly any support down in here until you get down to the 70,000, 75,000 range. So bulls need to hold this area. Moving on to commodities, chart number 50. Here's DBC commodity index, again up 0.9% today, breaking out of that little coil, the black candle. Chart number 51, here's DBC on the weekly. You can see this, again, it's been in this range here for a couple of years. This could be a big mover in 2025. Chart number 52, here's the monthly view of DBC. I just want to show you how it's been consolidating nicely. You can see the moving MACD is recycled. Look at your moving average ribbon really pinching hard. So this could have, I think this is going to have a big breakout sometime in 2025. Chart number 53, here's the CRB to SPY ratio. Remember, I've been showing this absolute beautiful falling wedge. Well, look at it starting to break out of the wedge. This also spells trouble for the S&P in early 2025. Chart number 54, here's the same ratio. This is with the ETFs, DBC and SPY. And you can see this perfect 5-wave decline. Breaking out of this wedge would confirm the pattern. Chart number 55, here's crude oil. Slight break. Still in this little coil pattern inside the larger channel, but it's looking like it wants to break out of it. Look at your moving average ribbons trying to curl up a bit. Now, natural gas, big move today, up 14.5%, and it was off its highs, so it was up a lot more. But remember how this 200-day moving average was acting as stiff resistance, that whole decline. Well, broke above it the previous week, and it held it. That was your key. I went long natural gas, oil in fact. Anyway, then on the weekend, you had that weather report come and a huge gap. Here's a zoomed in view, so you can see how price broke that 200-day moving average on some expanding volume. It pulled back and held it. That was the key. And then today, of course, massive move. Now the weekly chart is interesting. Here's the weekly UNG starting to break a weekly a weekly channel. So this could be starting a larger move. So something to consider. Chart number 59, copper. Remember, it had a bear flag which broke down a couple weeks ago. Still looks weak. Kind of has a larger head and shoulder pattern too. If you see a little head here, left shoulder, right shoulder. And this is also indicative of maybe weakening world economy, recession. Chart number 60, here's DBA agriculture, bouncing back today a bit. This has overall been strong. And the final part of the newsletter, let's look at the precious metals. Here's gold, which was down 0.5% today. So again, there's actually 3 patterns we're looking for here. Well, first off, we became bearish or cautious back in October when it was hit 28,000. So one option is a simple zigzag, wave A, B, and we get a C move down, maybe to the 200-day moving average. Another one, if we don't take out these recent lows, could be a coil. So wave C, then you get a D bounce, then an E. Another would be a flat. Either way, we're still in a consolidation. Again, bull market though, so once this correction is over, I'm looking for new all-time highs. Chart number 62, here's silver, down today. Losing the 200-day moving average, there is a big demand zone in here, and there's a larger support down into here. Chart number 63, GDX, gold miners down 1.4%. Notice the 61 fib is down here. That's a big level. We'll see if it can hold that or not. They've been in a correction since October. And chart number 64, here's the GDX trading system based on the BPGDM. Remember, this gave a sell signal back in October. Excellent signal in that overbought territory. It has now worked down to 39.3%. It's not down here in the really oversold territory yet, but it is working its way down. Nice to see that. All right, guys, we'll see what happens tomorrow. Again, thank you for all your support in 2024. Let's look forward to a great 2025. Take care, everyone.